Hello, dosto. My name is Deepak, and today I'm going to talk to you about what am I watching out for this week. So today's Monday. We got 4 more days for this week: Tuesday, Wednesday, Thursday, Friday, and a lot is going to happen this particular week. And I have already been preparing our coaching tribe members as to how to adjust their portfolio, how to think about risk, how to think about opportunities, how to adjust it so you can take advantage of whether the market goes up or market goes down. So we've been already working on it, but I thought let me share what kind of things I look at in the markets and what kind of information I share with my tribe that helps them make better decisions. So that way more people can understand why it is so important to improve your financial education in the year 2025. See, I'm a tax guy. I mean, I have no business doing this, but honestly speaking, I saw a lot of pain. Some of you guys are awesome. You guys make 20-30% return without sweating. So congratulations to you guys. But then there are a lot of people who struggle quite a bit. Their portfolio are only going down. They don't go up. They don't understand how to read financial statements. They don't understand how the cash flow works. They don't understand how bonds impact the stock market. They don't understand inflation. They don't understand what happens when Feds pivot. They don't understand what liquidity is. They don't understand a lot of indicators that people watch out for. So there's so many things that people need to pay attention to, but a typical retail investor has no clue. And honestly speaking, it's not their fault. They don't need to know that because index funds has worked so well for so many years. But since 2008, the entire world took their money and poured it in the United States. If market did great, they left the money in market. If market didn't do good, they moved it to treasuries or bonds. But now with the tariff policy, people are realizing maybe that's not necessarily a good strategy. And people are a little reluctant to put their money in the United States. And because of that, I think we're going to see more volatility, not just right now, not just in 1 week or 1 month or 2025, but even in the next 15, 20 years. I think 15, 20 years going forward going to be quite different than the 15, 20 years we've been through. And those of us who realize that early enough and prepare ourselves and learn about finances will be able to take advantage of that. And those of us who don't and just simply rely on the old education that we've been gathering for so many years, we are going to suffer. Also, I would remind anyone who is in their 40s and 50s, I would strongly suggest that you brush up on your education in finances because this can be a very costly mistake. I'm not saying that index funds are going to crash or you're going to lose a whole lot of money. I think they'll be fine. But, after inflation, are they going to be able to generate a significant amount of return? I'm very doubtful on that. So we have to be very careful in not falling into a trap of overvaluations and just randomly paying whatever price somebody asks for. And that's what we've been doing for the last 20 years. That's why we are seeing forward PE of almost 21, 22 for S&P 500. And some of the individual stocks I look at, sometimes at 100, 120. I mean, just crazy PEs. I think those days are long gone now. We need to come back to the basics and really learn finance and be cautious. Anyhow, those are the kind of things that we talk about in the coaching class, but today I'm going to share it openly with everyone. So before I begin, let me remind everyone is that I'm not an investment advisor. I'm not here to tell you what to buy, what to sell. So anything you learn in today's video is purely for educational purpose, nothing more than that. So please treat it as such. And if you would like to learn more, then just reach out to me via taxcodeadvisors.com and I'll be happy to help. So today's Monday, April 21st, and market dropped today. And when I say dropped, I don't even want to say the number because it's been dropping, then going up, then dropping, going up. It's been up and down, up and down. We've been on roller coaster price. And the reason why we are on this roller coaster ride is because President Trump keeps giving us hope, right? We know his policies in a short term, at the very minimum, are going to hurt us. And I think he knows that. The administration knows that. And I think even public knows that. And more and more people are prepared to deal with that. However, I think people's patience is starting to run out. And especially those of us who are in 50s and 60s are starting to get really worried that, hey, can this be a crash like 2008? Can we possibly be in a situation where we won't have any returns for the next 10 years? And that's why people are spooking. And when people get spooky, when they get scared, it is possible people are going to withdraw their entire retirement plans, left and right. Imagine somebody has $5 million, $10 million sitting in their 401k accounts, and they go in there and say, boom, all of it out. And when that happens, what happens to all the stocks? What happened to S&P 500? What happened to our favorite QQQ? They all go down. And that's what people are really worried about. Now, what happened today? Did President Trump announce new tariff? No, nothing. What's happening today is right now is President Trump seems to be getting a little bit worried because he, sent out, I don't even know what to call his messages anymore. We used to call them tweet, but he doesn't really tweet anymore. So I don't know what you call him. He has his own social media. So let's just call it social media. He posted on the social media that he is not very happy with Jerome Powell. And I'll just leave it like that. He was not that polite. And when the choice of words he used is really showing how frustrated President Trump is. And people are, and when we don't really know what's happening, we naturally start to speculate. That's a human nature. So people are already speculating. Some people are going like, well, does this mean that President Trump knows that this market is going to crash, and that's why he's talking like that? Some people might say, these negotiations are not being successful. At least we don't really have any formal proof that anybody has come out and given us a concrete answer behind that. So is that the reason? Or are we not winning this trade war? And can we expect these tariffs to go back to 20, 30, 40%? So all kind of speculations in people's mind. But most importantly is people are saying, look, President Trump can't fire Powell, so that's out. And Powell is not cutting interest rates, so that's out. So where does that leave us? And that's the kind of conversation that is driving the stock prices down. People are having a hard time figuring out, are we heading towards soft landing? Are we running into a recession risk? Is there going to be a policy shift anytime soon? People don't know the answer to those questions. And I'm just talking about, doesn't matter who they are. It could be a hedge fund manager. It could be a regular investor. Maybe if you have a 401k plan, or maybe you're invested with some manager. I don't think anybody knows the answer to that. And that is what driving the prices down. Now, having that said, what can give us a little bit more clarity? How can I figure out, are we heading towards soft landing? Are we heading towards recession? Or can we expect a policy shift? Is there some indicator? Is there some information that we can pay attention to? Or do we have to rely on different experts coming on, different news channels giving their opinions? So I'm going to share some of the major sentiments, some of the major reports that are coming out this coming week. And I'll share that kind of data with you, because even though I think we already know the answer that we can expect from these things. I think most of you already know the answer. But the problem is people react when they see the data in writing, when the reports are out. So when these reports are going to come out this week, I think it's going to make these numbers look really bad, and market can go down even further, unless President Trump or Fed decides to step in and do something, which seems very unlikely. So, number one thing I'm watching out for is consumer sentiment report. Now, do you really need a report to figure that out? I mean, if I were to ask you, what do you think about consumer sentiments right now? What do you think the answer is going to be? Obviously, it's not very good. You're not happy with things that's the way the things are. Our 401ks are down, our retirements are down, our stocks are down, interest rates are super high. I mean, things are bad, right? So I think most likely that report going to come negative. And when it does, what do you think that's going to do to the stock market? So that report comes out on Friday, so watch out for that. Number two, housing. I mean, what do you think the housing report going to look like? Well, mortgage rates are still all-time high. That's a problem. Loans are expensive. People can't afford to buy new properties. People who purchased the properties in last few years, they were hoping that interest rates will come down and they can refinance. But that doesn't look like that's happening anytime soon. I mean, especially with tariffs and all that, if we don't get inflation under control and interest rates remain high, let's say for another year, I mean, you can imagine what that would do to real estate. Not just real estate, but so many other things like, as a business owner, I will probably not open up a second location. I will probably not purchase heavy equipment. I will probably not spend in other equipment that might be necessary. So a lot of problems come with high interest rates. So that is a problem. Besides the interest rates, what about tariffs? What does that do to all the construction material that we buy? Do they get cheaper? Do they get more expensive? Yeah, they're going to get more expensive. Number four would be, construction workers. So I think it's no secret that a lot of these construction workers were working under the table or under, some tax identification number instead of being social. Now that that population is gone, are we going to have enough construction workers to continue to do the work? So people who were plumbers, electricians, people who were doing the lumber work, painters, gardeners. So many people who are just no longer in the job market. What did that do to the job market? What do you think what kind of impact that will have on real estate as well? The truth is, all of this is going to make it harder to build and sell homes, which means fewer jobs and less economic activity. So, when a lot of people go to work, they shop at restaurants, they go to grocery stores, they buy stuff. But all of a sudden, if all of those jobs are gone, everything stops. So not just that the housing market takes a hit, but our economy takes a hit as well. So that's another one you want to watch out for. You can also look at some of this stuff by looking at, Home Depot forecasts. You can take a look at some of the other stocks that are into real estate. You can kind of figure out some of those numbers from there as well. But so far, things are not looking good. Then there are some, leading economic indicators. There's something, there is actually an index you can watch out. It's called Leading Economic Index. You can Google it. You can find out. It has a lot of different signals. I think roughly about 10 signals. They take a look at the current stock price, building permits, jobless claims. You can investigate if you wanted to. But that index has been falling for the last several months. In March, the index dropped by 0.7. So already bad. So that's a red flag, but most likely it's going to fall again this month as well. So that's another one that comes out this week. I'm going to watch out for it, and I'll share it with the group so that you guys are able to take action based on that as well. But this indicator typically means that we are already in recession or we're heading towards recession. We're very, very close to it. So that's a good one to watch. But then there's another one that I look out for, which is Coincident Economic Index. You can check that out. That's an interesting one as well. So the leading economic index tells you what's coming, what's going to happen in next month or 2 months or 3 months. But this Coincident Economic Index, that tells us how things are right now. And here's a problem. That index is actually hitting a record high. That index basically has different indicators such as job, income, production. And honestly, all of those things are still looking very strong. People still have jobs, the incomes are still there, America is still producing. So it looks good. So on the one hand, economy looks pretty good right now, but on the other hand, economy can get in a lot of trouble very, very soon. So kind of a little bit of a mixed signal right now. But again, that's a good thing, right? Because that gives us an opportunity to still adjust our portfolio so we don't take a big hit. So that's actually in our favor. When it comes down to labor market, I think we talked about it in the discussion call in the great details. Jobs are still holding up. The number of people filing for unemployment is still low. And that's usually a good sign. But we're starting to hear more stories about layoffs, especially because of trade tensions and rising cost. For example, on the discussion call, somebody was mentioning that Amazon laid off, I think, 12,000 or 14,000 people. In addition to that, when I'm talking to people, my clients who are in different fields, some are in government sector, some are in, there was a client I was talking to, they operate a non-profit, which were funded by federal government, had almost 1,000 employees, completely literally vanished. All of it gone. I think they only have 2 employees left. Another gentleman in my neighborhood, unemployed now. They're on layoff. There are a couple other people that I know of. They've been looking for a job for now almost 6 months, no job. Especially all the, fresh graduates. They're having a really hard time finding jobs right now. So, and then we already know the government side, right? We already know Dodge has been cutting a lot of jobs. So all of that is coming. All of that data is still not yet reflected in the numbers, but it's coming. So I think when that number comes out, things can get really, really ugly really, really fast as well. How about manufacturing? So look, even though business investments like equipment and tools, in dollar terms, they're doing well. People are still investing. But if you add inflation to it, if you adjust them for inflation, then they're not doing that good. We are actually starting to get behind. When I talk to manufacturers, for example, some of my clients, they're feeling the pain. They're feeling the pain from tariffs, from rising costs, from having a hard time finding employees. When they find an employee, they want more money for it. I mean, go to a local restaurant. Can you find a good meal for less than $15 these days? Or ask for a house cleaner, or ask for a gardener, or any other services that you may use. Everything is costing a lot of money. And on top of that, there is this uncertainty in the market. People don't know what will going to happen. So make the long story short, these business owners are actually less confident about making a business decision this year. And that is going to slow down everything. They're going to slow down hiring. They're going to slow down production. So that's another thing that I'm certainly watching out for. So, based on this, I think you can almost guess what the number is going to look like by the end of the week. So if I were to ask you, and maybe you can put in the comments if you don't mind, do you think we're heading towards soft landing? Are we heading towards recession? Or do you think that President Trump will resolve these tariff issues? Or do you think Feds will pivot and they will start increasing liquidity in the market, or they might do some massive rate cuts? I'm not talking about 25 basis points. I don't think that's going to do anything at this point. I think it's going to have to be something major if we want to save us from going into recession. But share your thoughts. What do you think? What's happening? So there you go, guys. That's what I'm watching out for this week. And as things progress, I will certainly share those details with you guys in the coaching tribe. So look out for those. But in the meanwhile, don't be afraid of the markets. Focus on what we talked about in the discussion call. If you want, go back and rewatch that entire recording. Try to understand what we were trying to explain to you about how you need to value risk in your own portfolio and adjust according to your current circumstances. So go back and watch that recording. I think you're going to find that one recording to be perhaps more valuable than anything else that you might have learned in the world of finance, especially right now. I think it's so timely. Some of you guys who are in your retirement years, maybe in your 50s or 60s, I think this can save your portfolio a lot. So please do not ignore it. If you don't understand it, feel free to ask more questions. We are here to help. Thank you so much for spending your last 15-20 minutes with you. I'll continue to give you more updates as they become available to me. I'll see you next time. Bye-bye.